Hi fellow traders, Marv Eisen here from Timeless Dollar Trading Academy. You know, one thing that we can always count on is volatility. And as you know, if you've seen any of my hundreds and hundreds of videos, you know I trade S&P E-mini futures and micro E-mini futures exclusively. And so I'm going to focus on that today. No surprise, right? So as I said, volatility is always present in the market. And so today I want to speak especially to all you scalp traders out there. Now, if you're scalp trading, chances are you're trading 10, 15, 20 or more trades per day. And some of those trades are winners, and of course some of them are losers, and you're making money a quarter of a point, 3/4 of a point, maybe a point and a half, 2 points each time you're in and out of the market. So I want you to think about how to trade in real terms, in terms of how to trade, knowing what to look for. Now, if you're scalp trading, in other words, I'm talking about short time frames, seconds to up to several minutes. So rather than just going in and out of the market based on seat of the pants, I want you to consider the fact that there are only 6 trade setups, and I teach them in my course, and I'll tell you exactly what they are right now. And you can memorize them. They're gap, support and resistance, trend, time and price, momentum, and candlestick. GST-TMC. Okay? Only 6 trade setups. So if you're trading short time frames, learn these 6 trade setups. Gap, support and resistance, trend, time and price, momentum, and candlestick. Okay, those are the 6 trade setups if you are trading for the short term. But if you really want to learn how to trade in terms of making money, and when I say making money, I want you to take a look at this chart. Now, you see the horizontal lines on this chart? There are 20 points in between each horizontal line, okay? 20 points. So that means between each horizontal line at $50 a point, that means we're talking about $1,000 in E-minis between each horizontal line on this chart. So we're not talking small time frame trading here. We're talking making big money. And so beyond the 6 trade setups, and you really have to know what they are, and the volatility, and you have to expect it, you want to learn how to really make money trading. And I'll tell you what I do and what it took me years and years to learn. And that is using a couple of things, a couple of major points that the market is going to give you, not points, but pieces of information that the market is going to give you every day, and use that in conjunction with some trading tools. And what are those trading tools? Number 1, the previous day's close, which is the basis of the gap trade, and the tailored trading zone. Now, the tailored trading zone is an estimation based on mathematics of where the market is likely to go on any particular day. So here you're looking at my chart of Monday, August 5th. And as you can see, my trading zone is up here, okay? Here's my trading zone. This is my trading zone that I've drawn out of my chart. And here is the previous day's close. Here's the previous Friday's close, all right? And as you can see, the market didn't trade anywhere near either of these 2 metrics. So you might be saying, Marv, this is absolutely ridiculous. What you're telling me is useless. Not at all. You really have to know how to trade based on what to look for. And what to look for is the intraday high or low. And how do you find the intraday high or low? You have to use a lot of patience. And I will tell you right now, the intraday high or low is usually printed within the first half hour to hour of the day. Now, as I said, it takes patience, and to some extent, it takes a leap of faith, because in looking for the intraday high or low, and you've got to practice this, you're going to be wrong some of the time. It's just the way it is. But basically, you're looking for the intraday high or low. And so what is the intraday high or low? Well, it's simply the lowest or the highest price that the market is going to print on any particular day. Now, sometimes the intraday high or low is useful for the morning trade only. Sometimes it'll put in a intraday low in the morning and then go lower in the afternoon. But I'm only going to talk about the first half hour to hour of the day. So let's focus on this. So here on Monday, August 5th, the market opened right over here at 9:30, and I have my trading zone drawn out beginning at 9:30 Eastern time, of course, and 4 p.m., 1600, Eastern Time. Again, no big deal right there, right? No mystery. And so the trading zone, and you have to know what the trading zone is, and we'll get into that later. The trading zone is a piece of information, a metric that tells me where the market is likely to trade in terms of the range between the intraday high and the intraday low. So as I've just said, the intraday high or low is likely to be put in within the first half hour to hour of the day. So the intraday low, in this case, in Monday, the intraday low is put in right over here. You see this little, I guess it's not quite a hammer, but this candle with the long tail here. So I'm going to clone my trading zone. I'm going to make a copy of it, and I'm going to bring it down to where I determine is the intraday low, okay? Right over here, and I'm going to set it right at 9:30, okay? Right at 9:30. So the opening is at 9:30, and here's my trading zone, and I set it right at the intraday low. And where did the market trade up to? It traded up to and through the range. Now, in this particular day, it went through the range, but notice that it went up to the resistance and then backed off about halfway, but this is where you get off. And forget about the rest of the day. Again, there are 20 points between each horizontal line on this chart. So we're talking, let's see, 1, 2, 3, 4, 5 times, it's 100 points, 100 points at $50 a point. This is $5,000, friends. All right, so you're not going to trade a $5,000 day. This is one contract. I'm talking about one contract, okay? So how useful is this information? You be the judge. Let's go further. This is Monday. Let's go beyond Monday. I'm going to delete that clone. Now here is Tuesday, August 6th. Now on Tuesday, August 6th, here was the previous close. Here was Monday's close. And again, here's my trading zone that I drew out. And we'll get into how I draw it out later in this video. And the market opened again, didn't go anywhere inside the trading zone. But look, the gap trade wasn't much of a gap trade, but prices came down, kissed the gap, right, which just happened to be, coincidentally, right at the Taylor calculated trading zone resistance point, and then moved further up. So where is the market going? Remember, the numbers tell the story. And if you can find the intraday high or low, wait a half hour to an hour, see where the intraday high or low is put in, and then use your trading zone. And so I'm going to, again, make a clone of the Tuesday trading zone, and I'm going to move it to the intraday, right to the intraday low, which was right over here again. Okay, right over there, move it right over at 9:30. There we go, 9:30. So I moved it over here. Let me move my chart down. And where did prices go? Okay, coincidence, right? 2 days in a row. The prices moved up to the range, through almost all of the range. Now, this doesn't happen every day, but it happens most days. So if you can find a trading system that works most days, how valuable is that, okay? Now, again, I'm not saying not to trade by scalping, not to trade using the 6 trade setups: gap, support and resistance, trend, time and price, momentum, and candlestick. I'm not saying don't do that, because trading is risky. So let's acknowledge trading is risky. The market is volatile, but I will tell you, I am telling you that the market does have targets, and these targets can be calculated numerically, and that's the whole basis of George Taylor's trading technique, okay? And it's been adopted to use by day trading. Now, I didn't adopt it to use by day trading. I studied George Taylor, and I studied a whole bunch of other people who tweaked it and back tested it so that the formulas that I use are the ones that are most accurate, having been back tested for 20 years. So let's move forward. This was Tuesday, August 6th. I'm going to delete the clone. Let's go over to Wednesday. Now on Wednesday, prices started right over here. This was the morning, the opening price, 53.27, and the market moved up at just about 10 o'clock or so, or 9:30, just before 10 o'clock, to an intraday high. Almost broke through, almost tested it rather later in the day, but didn't take it out, didn't take out the intraday high. So what do? We move our trading zone. Again, we clone it and make a clone. And I move it up to my intraday high. I just wait. Remember, got to use lots of patience. I move it up to my intraday high. And where did the market trade down to? Right where the transposed trading zone said it would. It actually kissed that support unit, that support level, and then bounced back up, hit the gap again, went through the gap again. But this is where you get off. You get off. Well, you can get off even earlier if you feel that you've made enough money for the day. I mean, again, we're talking 20 points in between each horizontal line. All right. So that was Wednesday, August 7th. Now let's do Thursday. Okay. Thursday. Here's Thursday. Now on Thursday we had an interesting development. Now the market has been rattled this past week because of the the economic outlook that traders felt was going to begin some kind of recession. And I told you at that time when I made a video, I said, don't panic, the market is going to recover. There's no indication of recession. And so on Thursday, August 8th, Thursday, August 8th, looking at the economic calendar and what happened at 8:30, initial jobless claims came in and they were less than were even forecast. So the sky isn't falling, the market isn't falling out of bed, the economy isn't tanking, So what do you think that does to the market? Okay, right here at 8:30, it was prices were coming in right at the previous close, at Wednesday's close, and boom, they moved up about 40 points, almost 40 points, okay? And then they opened right about there. And so that was basically, that took out the morning range, because the range would have been, if I moved the range up to where the market would have opened, right over here, and I'm going to clone my trading zone again, clone it again. But I have to use a little common sense here, and the common sense is here. Where was the true open? The true open was over here, but really it would have opened right over here, okay? It would have opened right over there, okay? So I'm going to take my trading zone, I'm going to move it over to there, where the market would have opened, and where did the market trade to? Told you. Okay, so now let's go further. That was Thursday. Now here's Friday. Now Friday, now I have to update my trading zone. And what I'm going to do, see, here's my calculator. And so for Friday, I didn't enter the numbers on Friday, the open, high, low, and close. And this is going to give me the range for Monday, okay? It's going to give me the resistance number and the support number, the yellow columns in the calculator. And this is all calculated automatically. I know it looks a little confusing, but believe me, using the calculator is very, very simple. All you do is enter the open, high, low, and close in the rows where I'm pointing to over here. These rows here, open, high, low, and close for the day, and dates fill in automatically in the calculator. All I have to do is put in open, high, low, close, and I'm going to do that for Friday. I'm going to show you how I do it. So here on Friday, the open was 53.37. Go back to my calculator, 53.37. And in this version of the calculator, I leave out the decimals. I have a decimal version for markets that trade in much lower ranges, but if the price opens on a tick, ticks are a quarter of a point, so 0.25, 0.5, 0.75, and so on and so forth. I leave it out. I average up or down. So if it's 53.36.75, I put in 53.37, and so on and so forth. But I don't use decimals in this version of the calculator. I do have another calculator where I do use decimals, and that's better for markets, and that's more appropriate, more accurate for markets that trade in a very narrow range where decimals do matter. So now I have to put in the Friday's high. So I go back to my chart, the Friday's high, and I wrote these numbers down previously. The open, high, low, close. The high was 53.85. Go back to my calculator. I enter 53.85. And I move down. I move to the next column, and I go back to my chart, the low 53.25, enter 53.25 in the next column, and then my last column I put the close. This is the closing price, which is the gap price for the next day. So the closing price is on Friday, or rather was 53.69. So I go back to my chart, 53.69, 69. Now when I press enter, you're going to see all these, you're going to see the rest of the row, all the columns fill in. So I'm going to press enter, and there we go, all the columns fill in. So here's my trading zone for Monday, August 12th. Resistance is 54.09, support 53.30, and the range is going to be around 79 points. The range is in the gray column. And again, all the columns fill in automatically. They're color-coded. Can't miss it, okay? But the most important three columns you want to grab onto is the ones that are in yellow, 54.09, 53.80. So I'm going to enter this into my chart for Monday to prep for Monday. This is where I expect Monday to trade, or at least the range for Monday, 79 points, 54.09, 53.80. So I go back to my chart and I go to Monday, August 12th. Then after I draw my trading zone for Monday, I want to put my gap trade where the Friday price closed. So I go back to my calculator, and here in the closing price, 53.69. So I go there, I go back to my chart, right about over there, and I draw my Friday closing price. And now I'm set up for Monday's trading. And so that's it. That's how I trade both short-term and long-term. And if you want to learn how to trade both short-term and long-term, head over to my site at timelessdollar.com right over here, and you'll find out all about not only the tailored trading zone and how to get the calculator, but you can also get my courses on trading. I even have a free course on how to avoid the pitfalls and the mistakes that most traders make. So that's it for today. My video is a little longer today. Thanks so much for your patience, and thanks for watching. I hope you learned something. Trade safely, use lots of patience. I'm Marv Eisen for Timeless Dollar Trading Academy. See you in my next video.